rule number one is know whose lunch you're eating, or you might just bite into a rock. What do you think about that?
I think it's a very true point. A lot of the times, we might see something that's underpriced or overpriced given our forecast, but it might be there for a reason. And we actually might be getting in too early, just before a huge, let's say maybe inside information is there, or there's a structural change in the business, right? Here's a good example. Maybe XRT was trading XRT's retail ETF, right? And maybe that was trading expensive relative to, let's say, another retail ETF. And all of a sudden we start to see the spread widening, and people might have come in to short that spread. But in actual fact, it was because they were loading up with GME, right? It was becoming a huge part of the ETF. So big structural change there. And if you don't understand, what's happening there, and maybe who might be on the other side of your trade, you could be biting into a rock.
Yeah, and do you think that's sort of like we draw a lot of analogies with poker. Would you say this is sort of like knowing the table you're playing at?
I think so.
Right.
I think so.
When you want to make money as a poker player, it's not just about how good you are. It's actually about how good you are relative to the people you're playing. Right. So you're a good poker player. If you want to make money, you're not trying to go play against Daniel Negreanu or Jordan, or Eric. You're not trying to go play against these guys. You want to go maybe try and find, the guy who's on a business trip, playing some poker late at night, having a few drinks, a little loose with his money. Or, you maybe go down to Vegas and you want to play against, the bachelor party, right? The guys who are down there just having a laugh, willing to give up some money. And that actually leads into one of the second beliefs, something that we've really started to ponder on more recently, I think, which is what isn't, or actually like say more, which is, where is someone willing to give up some money? Right? If you want to make money trading, ask yourself, where in the market is somebody willing to leave some money on the table?
Mm-hmm. Yep. Especially for like a strategy development. I think it's you have to start looking in the right places, right? You got to start finding the right tables. When you go to the casino or Vegas, right, you want to pick a table where there's going to be a lot of businessmen. Let's say you want to play at a higher stakes, right? And you want to play with these businessmen that are going to be there. Just like in trading as well, you don't want to be, you want to be able to find a good game.
I got it. We're just going to go through a few of these here, guys. So feel free to ask questions as we go. I'd actually love to take some of your questions here. I'm sure Jordan would as well. But another one, Jordan, and I think this is maybe a tricky one to grasp, or it's not really like talked about much, which is that trading is not a test. It's a competition, right? That's something that I've heard you say a lot. I don't know if you hear other people say that, but why do you say that so much?
I think that's just how it is, right? It's like if you're good and other people are good and maybe people are better, well, just because you're good, you're not going to make any money, right? You got to be better than, let's say, the median person, right? You'll be better than the majority of people in order to make money in this game. There's not unlimited money to be made, right? If it in a zero-sum game, trading's not exactly a zero-sum, but in a zero-sum game, you got to be taking money from someone else.
Yeah, exactly. First place gets the whole cake.
Exactly.
Not much left for second place guy. So
it's not like a lot of people come out here and they'll say, I'm trying to understand these charts. I'm trying to understand the patterns. Or once I master my psychology, I'm good to go. And it's more than that, right? You got to stop thinking in terms of yourself and start thinking about the other people who are out there, right? If these guys are all, masters of psychology and masters of technical analysis, well, then you're way behind the game. Just getting good at technical analysis or mastering your emotions is not going to get you there.
Yeah, and I would agree with that. I'm just trying to think about it. When did that become like a reality for you? That trading was actually a competition, and that just learning the Greeks or like learning the charts wasn't going to cut it.
I think it was built up over time. Like, I don't think it was like one time where I was like, hey, this,
You didn't have that pivotal moment where like your third eye of trading opened and you're
yeah,
like, I get it.
I think trying to understand who's on the other side of my trade or why something was mispriced, kind of got me thinking in that term.
Mhm.
Like, oh, you know what? I gotta be able to, be better than the majority here in order to make good decisions. Also from poker as well. Like, I think I can't remember where I read it. I think maybe it was actually on Quora, funny enough, where someone said like the money eventually goes to the person who makes the best decisions at the table because we're all put in the same spot at one point. And
Oh yeah,
I
you
was
want to
like,
go through
oh,
that analogy? That was a really good one.
yeah. So if we're playing poker, right, and let's say we're playing a million hands, and all people start sitting at a table, we're all going to be put in a very similar situation, and some are going to be put in almost the exact same situations. And so the ones that make the best decisions during those outcomes, sorry, those situations, uh, make money in the long run.
Yeah, exactly. Like over 100,000 hands, everyone's going to have pocket aces,
Exactly.
right? Everyone's going to have pocket aces where they flop an ace and two kings. And the decisions you make there are, will determine who wins in the end.
Exactly.
Yeah, I think that's really good, actually. What do you think about this, Jordan? So a lot of the times, like I remember I used to believe this that the market wasn't really that smart. Like there was a lot of mistakes.
Yeah.
Right. And like I was like the opposite of the efficient market guys. I was the
Yeah.
inefficient market guy.
Yeah. Yeah.
But what is your view on market efficiency and the level of sophistication in the markets these days? Right. We say, be better than the median person, but
Yeah.
who is that median person?
Yeah.
Right. Who
Yeah.
do I
Yeah.
need to be better than? Like, do I need to be better than the guy who's retired, whose son told him to buy a bunch of weed stocks and he dumped his whole savings into it? Do I need to be better than a guy doing a discount cash flow model, like an investment banker? Do I need to be better than who?
Yeah. Yeah. So it really depends on the market you're playing, right? If I'm going to go play, let's say on the S&P 500 options, well, I got to be better than the guy quoting the bid and the ask, right? And
Mm-hmm.
so, a lot of time that might be, let's say, Citadel, right? And sure, there are dislocations, right? That happen all the time. Too much pressure coming in. But if you're going to go play in the S&P 500, that's an extremely liquid market. You got some of the biggest players in the world coming in there, and you got to be better than them, right? At least better than you have to be at least at at the same level as them to play, right? So usually I like to go in a little bit less liquid, looking for those real inefficiencies, right? Something that's trading for $10 when it should be trading for $8, and it's not just because my model says it should be trading for $8, but a similar product is trading for $8.
Mm-hmm.
So I can just sell this at 10 and buy that at 8, right? In the S&P, for example, I might use the S&P as a hedge, right? Because it's liquid. So, for example, in quantitative finance, right, a lot of the thing is we are transferring liquidity from one area to another area. So there might be like this crazy liquid ETF that is very similar holdings to the S&P 500, and so we're going to transfer liquidity from the S&P vol to this ETF by, let's say, selling this S&P vol and buying this ETF vol, or selling this ETF vol and buying this the S&P vol. So
Mm-hmm.
that's really what it's about.
So just quickly here, just because you mentioned market makers, I think market makers are one of the most misunderstood players in the market, at least from a retail perspective.
Yeah.
And I get it for the most part. In the end of the day, every good story has a villain, right? You wouldn't be as dramatic without a villain.
Exactly.
But what is your view on market makers and the role they play in the market, and why is there this demonization of them, and what's the reality?
Yeah, to be honest, I don't know why everyone
Because
kind of
they
get like
make the market.
yeah, I guess they make the market. I don't know, but to say like they're against me, right? Like at least growing up,
Market
I'm sure
maker
you as well, Sean.
manipulation.
Maker manipulation. That market makers are against me. They're not against you. Right? They're actually trying to provide you a service. They're trying to give you the best bid, and they're trying to be competitive as well, right? They're going to try to make the market as tight as possible. And if they don't, someone else is going to, right? And it's just going back to that analogy that we're talking about with the competition versus a test. If one market maker says, I'm going to quote you super wide, right? And they have fair value, let's say over here, and they're, they could quote here, but they're deciding to quote here. Well, a more sophisticated market maker will say, okay, well, I'm going to take the volume and I'm going to quote tighter. So it's competition in that sense.
What would the world look like without market makers?
Be very
Maybe
wide.
a good idea of the role they play.
Yeah. I'm not 100. You'd have like super wide spreads. You wouldn't have functional markets. Like,
You'd be buying like it'd be like, let's say you bought something for $10 and you instantly were like, you know what? Actually, this is not the position I want to be in. I made a mistake. You'd have to exit for like $6 instead of exiting for $9.90.
Yeah, there'd be crazy dislocations, like because market makers also try to price things fairly, right? Given the flow, given the volume coming in, they're going to adjust, right? And I think they do a fantastic job at trying to make fair prices.
How do they make money?
They're going to make
not
money
manipulating the market. How are they making money?
Yeah. So they're making money by buying on the bid and selling on the ask, and do that over and over and over again.
Okay, scalping the real scalpers.
Yeah, and it's a lot more sophisticated than that, and even a lot of stuff is over my head as well. So.
Mm-hmm. Exactly, Eric. Nobody would trade. Okay, let's keep moving here with some trading philosophy, some things to think about. This is one that I really like. This actually changed the way that I thought about trading a lot. Take on the risks that others avoid, discard of the risks that you don't want.
Yeah. I do really like that quote. There's going to be a lot of the risk. Yeah, it means basically like there are certain risks that people don't want. So, for example, maybe they don't like the idea of the S&P 500 going down 50%, right? They don't like the idea of seeing their equities go down 50%. So they're going to cut that risk by, let's say, buying out of the money puts, right? And so usually those areas, those risk premiums start to get a little bit pricey, right? And you can, let's say, sell those, right? Or for example, a risk that everyone likes to take, not everyone, but a lot of people like to take, is selling covered calls. So they buy the stock and they'll sell those calls, right? And so that's going to drive the call side all the way down. And if you have too much selling pressure coming in on the upside, well, you can come in and buy those calls, right? So you want, like, in that case, people are willing to take on that risk, right? Of buying, basically selling an in the money put, right? So the same thing as a covered call. And if they're willing to take that risk, well, it might end up getting too cheap, and then you can buy it, right? But if they're not willing, let's say, take the risk of selling other money puts, then you could sell those.
I just want to say we have 20 people tuning into this stream, which is really awesome. For everyone watching, if you have any questions that you want Jordan to answer, feel free to drop them in the chat. Jordan is a professional volatility trader and my business partner here at Predicting Alpha. He has a ton of experience and is a pretty open book when it comes to trading philosophy, ideas, and how to build good strategies. So feel free to drop any questions you have in the chat, and I'll be sure to ask them to him.
Oh, that's a nice introduction, man. Thanks.
I got you, man. Okay. What do you think about this? Find where you disagree with the market. That's where there's money to be made.
Find where you disagree with the market. Yeah. Okay. Yeah. 100%. Like, I for sure agree with that one. In the sense that if you agree with the market, there's usually no trade there, right? The whole point of trading is like you disagree with the current price, right? You disagree with the world, and that's not going to be often. Like the markets are most of the time efficient, right? I think we all need to start there. Like the markets, they do a good job at, everyone thinks that every day there's a trade and like there's always an opportunity. A lot of time there isn't. And so we as a trader need to say, okay, well, we need to really think about why something would be trading here and what our fair value is, right? And when it goes away from what our fair value is, well, we disagree with what the current price is, so we can make a trade. Now, sometimes, and a lot of the times, we're wrong, right? That the market was actually right. And that's okay, right? That's okay to be wrong. I think that's, that's definitely part of the game. Can't always be right.
Mm-hmm.
But we need to have fair value. And once we have that fair value, well, when the market goes away from it and we disagree with it, then we can come in and make the trade.
So I think you said something really interesting there. You said there isn't always a trade. But, when we look at the, technical analysis space, not to dive too deep there, but I think it's a really interesting one. On your side, you're saying you have to find where you disagree with the market. That's where a trade lies, but you're not going to disagree with the market all the time because it's pretty efficient. Mm-hmm. But when we look at the, chart reading world, it seems like there's always a trade. Mm-hmm. Minute by minute, there's always a trade. There's always something you could do. Why is that in your opinion?
I think they're just seeing something. So Augustin LeBron actually posted something really cool today on Twitter that I thought was really interesting. And honestly, maybe like sort of the way that I think about it as well is that a lot of people will just look at the price chart, right? So imagine, you have this, you're looking at this chart. That's how the majority of the people are going to see it. So they're always going to see these patterns, right? Each person's going to see a different pattern. But what a real trader would actually have is like an overlay. Imagine an overlay of the same type of chart, but sometimes there's deviations between the two. Right? So you have like these two things that are like usually coincide, but sometimes they split. And this is the market's price, and this is our fair value. Right? And so when a trade like this happens, we want to come in and close that spread. But as a retail trader, when you're just seeing this price chart, we're always going to see a pattern. Like humans are pattern seeing creatures, right? So we're always going to see some type of pattern if we're just looking at a chart, in my opinion. And I think that's why there's always a trade. There's always a stock breaking out. You know what I mean? There's always a stock breaking down. There's always a stock having high volume. There's always these things that are an illusion of there's a trade to be made here.
Yeah, I think I would definitely agree with you. It's a tricky spot to be in, right? Because I agree that the reason is because we see patterns in everything.
Yeah.
And it's like, that's why it always seems there's a trade there. But if you think from the perspective of where do I disagree with the market, which is really what you're saying, right? If you think about the action you're taking, when you buy something, someone's selling it to you. You are literally on opposite sides of this trade, right? And a lot of the times you disagree on the value of the thing.
Yeah.
Right. Obviously there's exceptions, a lot of exceptions, but fundamentally we disagree.
Right.
And so when we start thinking in that perspective, it's like, okay, maybe we need to add, and trying to think about who could be on the other side of our trade. How sophisticated are they? Maybe we need to think a little bit, we need to add a couple more layers of analysis beyond just the price chart. If we want to be over time, the guy who made better decisions.
Yeah.
So I'm seeing a few questions in the chat here. We'll go through them quickly. We're going to do questions in little blasts here. So we'll hit 3 questions right now. Recommended books for beginners, Jordan?
I think I like Augustin LeBron's book, The 12 Laws of Trading.
Great. So Matthias, that would be the book recommendation. The Laws of Trading by Augustin LeBron. And you can actually follow him on Twitter as well. If you do, tell him we say hi. Kua's asking, sometimes staying power and making yourself diligent to stay trading sets you up to be available for successful opportunities. What did you do in your career to build staying power?
Sorry, could you read that one more time, Sean? It's a little bit of a tricky one.
Yeah. Kua, do you want to break down what you mean by staying power a little more?
Is that Koa?
No, Kua. He's one of my buddies from another group.
Got it.
So he's asking sometime. We'll move on to the next question. Kua, if you don't mind clarifying that a little bit, we will. We'll definitely get back to it. Justin had a question. This is Justin from PA.
Hey, buddy.
He said, how long did it take you to perfect your execution? Referring to earnings trades specifically. Is perfection linear to the number of trades, or does it happen at discrete moments, like an aha moment? It's a really good question.
Yeah. So first of all, I just want to say, like, you don't have to have perfect execution. And even today, my execution is not perfect, right? The spread should be big enough for you to make money, even if it's not perfect, right? It's got to be a marketable position, right? Because we are liquidity takers. We're not liquidity providers most of the time. So, if the execution is not perfect and you can't make money, I would probably move on to a different strategy. That being said, the strategy can always get better, right? So you might start to find different things just from doing it. So, for example, I remember when I was trading earnings, and I was really dialed in there. I would listen to all the conference calls, try to find specific things that people might have been missing for the earnings event. I would try to find like what actually matters for the specific company, right? Like for Netflix, for example, I used to think it was price to earnings, and as I started listening to the calls, right, I realized it was the subscription, the monthly added users. So now I was creating a model now where I'm regressing the monthly added users onto the or the change in the monthly added users into the change of the equity price. And so it's not about it's about, okay, can you get into this position? Can you be in this position now that's going to make money, right? And if it's not, well, then you got to go back to the drawing board and really try to figure out, can I eventually get this thing profitable? Is there a big enough spread here for me to get this profitable? And that does take a while, right? But sometimes it's there. If for earnings, I think that's more of a data scientist approach. And so for that, it's going to take a little while to build. Like, look at what Hutch is doing. One of our guys, he's been doing this for, I don't know, 6 months now, and he's had one of the best seasons he's ever had. Right, and that's just from so his model today and the way he trades earnings today is way different than how it was before.
And that's through experience and like sort of thinking about how to improve this.
Yeah,
it's continuous improvement. It's like where am I losing money? Where am I bleeding out? Where am I excelling at? Is there a way to try and isolate this?
Yeah, and I would add also, I think that's what distinguishes us from like an engineer, right? Like an engineer has all the tools available, and an economist has all the tools available to run a random forest or run these models and try to predict the future. But it is the trader who can say to themselves, I think we should add this into the model. I think we should add this variable into the model, because it's through their experience, through their understanding of the game, that is going to allow them to take it to that next level and actually make money.
You think that discretion is what still separates us from like AI trading? Why AI hasn't underperformed?
Yeah, I think so. I think a lot of the engineers, if you're not really understanding, the game, I think
Mm-hmm. Then there's no alpha.
I honestly don't think you can just come in here and run a neural network and be like, I'm going to make a lot of money here.
Yeah.
Right.
So Kua clarified his question here a little. He said, so by staying power, he means like not blowing up your account. So it's being able to stay in the game, right? So he says, sometimes staying power and making yourself diligent to stay trading sets you up to be available to successful opportunities. What did you do in your career to build staying power? To get to the point where you don't blow up?
Yeah. So, okay, that's actually a really good question. And I think it's a really good point as well. It's like, if you've blown up, then you miss a whole bunch of opportunities. And also, if you scale in too quickly, you miss a whole bunch of opportunities.
That's one that hurts me a lot.
Yeah, it's actually hurting me right now. There's a big spread that I can't get into because I have no more buying power.
Oh, sad.
So what did I do in the career that helped me get staying power? I'd say it's just betting when you have the edge, right? Betting proportional to the size of your edge. I think that was what allowed staying power. If I don't have a lot of edge in a trade, I'm not going to bet big.
So probably something along the lines of understanding your expected value.
Yeah, I would say so. I would say that, because if you think about it, like the 2% rule that's out there, bet 2% of your account on every damn trade. It's like, well, what if you're betting 2% on like those really bad trades, or like the not high conviction trades, and you're also risking 2% on an extremely high conviction trade? I think that's probably one of the things that allowed for it to happen.
Interesting. Yeah. Like, with your, Rob saying Kelly criterion.
Yeah. You try to bet bigger when you have a bigger edge, and bet smaller when you have a smaller edge.
You got to be, you got to, know when to play tight to the vest and know when to throw it down on the line.
Exactly.
Okay, let's do a couple more of these. I've got a whole bunch of different little philosophy points here, trading philosophy type things. Maybe I'll publish this as a little Twitter thread. That could be fun. Why not? What do you think about this, Jordan? A drunk roulette dealer beats a disciplined gambler in the long run.
100%. Right. Well, it's so funny. Like, I think you asked this question once. We did Instagram poll or something.
And everyone
It's
said
like,
the gambler would win.
Yeah, it was like who's going to win? Who's going to make money in the long run at a roulette table? The roulette dealer coming off a binge, or the gambler who's super focused on Adderall, ready to run.
Yeah, red trading in the zone 95 times.
Yeah, and it's like
ready to rip.
Right. It's it's surprising to see a lot of people actually chose the sophisticated, or not the sophisticated, but the in the zone gambler.
Yeah. Why is that wrong in your opinion?
He's just at a disadvantage, right? And if he's got no edge, it doesn't matter how sophisticated he is, or if he's got no edge, it doesn't matter how disciplined he is, right? It doesn't matter how much he prepared for this.
How do you relate that back to trading?
Well, if you don't have an edge, right, you're not going to make money in the long run. You're going to be a noise trader.
So it would be strategy over psychology.
100%. 100%.
Do you think people spend too much time focused on psychology?
Yeah, of course. And people, they spend so much time on it. They've read Trading in the Zone 60 times.
Like, why do you think that happens though? Right. I think this is a really, really important point. Why do you think that happens? Why do you think that's the case?
I feel like it's something that they can control, maybe. Like, you can't control the chart, but you can control the way you feel about the chart, right?
Nice.
So maybe that might be
There's also the fact that
one of the ways.
There's social proof for it. When someone else has a losing trade, they blame it on their greed.
They're disciplined.
Yeah, I think there's a whole can of worms we could unpack on that one, but we'll go through a couple more here because it is 11. Guys, we try to keep these to 30-minute sessions so we can do them every day for you. But I think this is going really well. I have a couple more here, Jordan.
Mm-hmm.
If you have a couple more minutes, we'll keep it going.
Yeah,
and guys, if you have any follow-up questions or any more questions you would like Jordan to answer today, just drop them in the chat. We will be we'll put priority on those over the points that I'm bringing up here. Let me see here. Okay, what do you think about this?
Mm-hmm.
If everyone knows it, it's not tradable information. Understanding what tradable information is can make or break your trading career.
I think for sure. Like, I actually got a really good example for this one. A lot of the time people think, a company's going to beat its earnings, right? It's going to have great earnings. Like, it's beaten earnings before, like a lot of the time, right? Like, for example, I think Zacks puts out a report like this company's beaten earnings 10 out of the last 11 times. But the thing is, the market understands that a CEO is going to bias low, right? He's going to bias low, and so he can come over the top on the earnings call, and that's going to be baked in. And if you can quickly see this by taking any stock and looking at the average surprise, right? And you'll see that on average, these companies, at least a huge majority, have positive surprises on earnings, and that is simply because this, like, of what I was mentioning there about over what's it called, John? Under
promising, over delivering,
right? And so that's going to be baked in, right? When you see Apple, for example, have a very slightly positive quarter, then they drop.
Mm-hmm.
Right? And people say, like, hey, Apple stock had a great quarter, but my stock is down. Right? And it's like, that's already going to be baked in.
Yeah, they underperformed relative to what was actually being baked in.
Right. So, And that baked in is going to be because of the information that we already know, right? We know Apple's going to, have a positive surprise. That's why actually when you see a company have a negative surprise, like it gets destroyed. So I think, if you don't have, if you can't, if everyone knows the information, it's usually not tradable. Tradable information is usually hard to find, and it's it's hard to find.
Very
or at least
cool.
it's different. It's unique.
Here's we'll do two more quick ones here.
Yeah.
Number 5 on my list here was, not every profitable trade is a good trade.
Mm-hmm.
Not every unprofitable trade is a bad trade.
Mm-hmm.
Methodology over outcome.
Mm-hmm.
What do you think?
Yeah. We're gonna have a ton of losers, and if we do okay, so for example, people who bought the GME calls and then sold them right away, and made some money. Sure, they made money there, but if they go and replicate that, right, they're going to end up eventually losing money, assuming that there was no real methodology behind it, right? Maybe everyone was jumping on this, so they jumped on it, right? That's not something that's going to be replicable. They're not going to be able to do it over and over again. And if they do try to do it over and over again, they're probably going to, become a noise trader and lose after commissions in the long run. Usually those options are going to be overpriced.
So we have a couple questions here. I'm going to share with you now, Jordan, to answer.
Yeah.
And then I have one last thing to end off with. I see we have 23 people on this call right now. Jordan,
nice.
You're famous now. Congratulations.
Yes.
Guys, if you've enjoyed this conversation, please just drop a like on the video. Maybe we can make these types of little interview style things a little more frequent. Leave a like on the video if you liked this style for maybe a quieter day in the market. We can do things like this.
Oh my God. Is the market down like crazy right now?
Right? Yeah, it turns out it's not quiet. The world's just ending. What's going on, Jordan?
Just taking a look here. Let's see what the Qs are doing.
Yeah, I want to see what the Qs are doing. Oh, they're up 1.5%, 1.2%.
Oh, yeah.
Nope, nothing. No drama in the markets right now. Not that I'm seeing.
My Tesla vol position is getting smoked.
I think
vols are 75 Vegas now on the.
No way.
On the Jan 2023s.
Oh God. Okay, well, we'll deal with that later. Justin's question is, he says, I listened to a Chat with Traders podcast and someone said we should mentally detach ourselves from the money to be successful. What are your thoughts on that?
I don't agree with it. Do you remember? I do not agree. We're in this game for one reason only, and that's to make as much money as possible. That is our job as a trader. How can I make the most money possible every single day? And if we are not trying to make the most money possible, then we shouldn't be in this game. And you know what? I'm actually curious you said that, Justin, because I think what he's relating to there is like maybe we're getting too emotionally attached to the money, right? And well, that just means that we're probably not a good trader, right? It's like, I think a good trader needs to embrace that. Okay, every single day, I'm going to be losing or making money, and I'm going to have a lot of variance in my P&L. I can't make money every single day, and every time I open up my brokerage, I'm going to be up or down. And some days I'm going to be down a lot of money. Some days I'm going to be up a lot of money. But my main focus is how can I grow this account as quickly as possible, and that means like diving into the money. Like when I say diving into the money, I mean like the P&L is our revenue. And as a good business, we need to look at that revenue. What are we doing right? What are we doing wrong? Where's most of our revenue coming from? Okay, let's put some emphasis on these strategies that are really giving us the revenue. And if we detach ourselves from that, I think it's not good.
Last one here. Individual traders can outperform Wall Street in the short and long term. We have many advantages over them. What do you think?
I think Wall Street doesn't even perform that good. Of course, you can outperform them because they're not even that good. right? The whole business on Wall Street is how can I raise as much capital as possible and collect a fee? That's the main business out there, right? How there's whole sell side research, right? How can I, at least make this look like I'm doing good research, and how can I sell this to a bunch of pension funds and mutual funds? Of course we can beat Wall Street, because Wall Street's not doing that great to begin with, right? We're going to have some great players in the game that are making a ton of money. But the majority of it is asset allocators, right? Or how can I raise as much money as possible? So I think 100%, the individual retail can beat Wall Street, and they can go into spaces that these big guys can't. There's so many inefficiencies out there, guys. It's you gotta really think about, like Sean was saying, where might people be willing to give up money? Where might there be not that sophisticated players? Where might there be too much supply or too much demand, right?
I think we can even go down the route, like an example that I saw that sort of got me thinking about this a little differently was if Warren Buffett found a company that was worth $250 million and he thought that it was undervalued, and he bought 100% of the company, and in the next year that company doubled in price, went from a $250 million company to a $500 million company. It literally wouldn't move the needle on Berkshire Hathaway. Not even a point. And that's just because it's so immensely big. There's so much money in that fund that $250 million is like, he wouldn't bend down to pick it off the ground. Well, Warren would, but.
And also,
that's a McDonald's franchise. I'll get it.
And if he tried to buy it, he'd push it up way too much. It'd be hard for him to get it in the size that he wanted if he's buying out the whole company. He's not even allowed to buy the whole company.
Mm-hmm.
Right? He's got to go through a bunch of filings. So, exactly what you're saying there.
Very cool. Yeah. And that just goes to show, we can sometimes take these ideas that, we don't need to, I think a mistake a lot of people make is they look at these big players and they say, I don't need to do what they're doing because I'm not them. I don't have $1 billion. But maybe the way to think about it is, maybe I can take what these guys are doing and go to places where they can't. And now I can be the big guy.
Or take on certain risks that they can't, right? I don't want to say selling out of the money puts, because, a lot of people can do it. But there's certain things that, certain structures, let's say, for example, a boatload of vol comes into Apple. It's not super easy to go and sell volatility, right? It's a lot easier to go and buy volatility, or go where there might be a structural inefficiency. Yeah, exactly. An earnings event. How many funds are allowed to go out there and sell straddles, right? Or buy straddles where the Vega crush is going to be huge the next day, right? It's just too much variance that a lot of these funds can't take on.
This is cool, Jordan. I appreciate you coming on and chatting here this morning.
It's great to be on the show, man.
I know, right? We used to do these a lot more frequently, but I feel like last little while they've died down. We'll see. If we get some good feedback on this video, I might be bugging you a little more frequently, having you join us.
I think that was all I have to talk about, though, man. I don't know if I could talk much more.
What?
I said I think you got it all out of me, though, dude. I don't know if I can.
I know, right? I think we just went over how to become a profitable trader in 40 minutes.
Yeah.
So if you want to see a repeat of this show next week, just drop a like on the video. Okay, everyone, that's going to be the end of today's live stream. I hope you guys did enjoy that. I had some fun doing it, and enjoy your weekends. We're going to be back at it on Monday, back with our actual market analysis. It's 11 a.m. now. It's time to go pick up a couple stouts.
Yeah, right. I thought you were going to say coffee, but I think a stout is a much better idea.
No. Don't you know, as a trader, your day's done by noon.
Oh yeah, that's right. We scalped the morning.
Yeah, we scalped the morning. We're out, man.
We're done. My yacht's actually pulling up right now as we speak.
What?
My yacht's actually pulling up right now.
Oh, sweet, man. Okay, I'll go start my yacht up. Well, I'll meet you out there.
Yeah. Fly over on that private jet.
Yeah, exactly. Right. I'll take the helicopter.
Okay. All right.
I'll use the jet to fly in my Lamborghini.
Yeah. All right, dude.
All right, everyone, take it easy. We'll see
Okay,
you.
see you.